This weekend, Donald Trump made a post on True Social alluding to the fact that he is going to be pushing for a 50-year mortgage, whereas currently the gold standard is a 30-year mortgage. The post itself was a picture of FDR with 30-year mortgage above it, and then of course a picture of Trump with 50-year mortgage above it. But as times change, as the economy changes, so do regulations and policy and how you have to affect things. So let's see if a 50-year mortgage is on the horizon. The promise from this is lower payments. For example, on a $400,000 mortgage at a 6.5% interest rate, a 30-year term would have a principal and interest of $25.28 a month, whereas a 50-year term would have a principal and interest of $22.55 per month, which is a $273 a month difference, or 11%. That small reduction could make the difference for some borrowers to qualify in high-cost markets. The trade-off is total overall cost. While payments are low, the amount of interest you're paying on a mortgage over 50 years compared to 30 years is astronomical. With the same $400,000 loan scenario, the lifetime interest would jump from around $510,000 over the 30-year term to about $953,000 over the 50-year term, nearly doubling the total interest that you would be paying. Homeowners would also build equity slower, as when you look at an amortization schedule, the interest is heavily front loaded, so it would take longer for them to build up equity and pay down the principal. Now, how would this affect the real estate market overall? By extending loan terms, it could help affordability for some individuals, the young or the first-time homebuyers. However, if supply stays where it's at, this very well could drive home prices that much higher because people can afford more of a home because they have lower monthly payments. So who could benefit from a 50-year mortgage? Well, potentially a younger first-time homebuyer who is purchasing in an expensive market, or it could be someone that's looking to prepay and pay additional amounts on their principal on a monthly basis to take advantage of the lower payment, or potentially investors optimizing cash flow, although this program would probably have guidelines to make it a first-time homebuyer program. So who should be cautious of a 50-year mortgage? Well, essentially everybody. If you can afford a 30-year mortgage, paying it off sooner with less interest, obviously that is the better play. But especially be cautious if you are stretching to qualify, which this program is meant to benefit those people, but those are the people that could be taken advantage of the most. So my take, as a lender, I do appreciate having more tools in the tool belt, but those tools need guardrails. If a 50-year mortgage actually does launch and become mainstream, become a qualified mortgage, this program needs transparent disclosures, it needs no prepayment penalties, and clear education on the difference of this program. This program could be useful for select buyers, but it is by no means the cure to the affordability crisis. We need a higher housing supply. So if you have any questions about a 50-year mortgage, or if you're interested in getting pre-approved yourself for a 30-year mortgage, or if you're considering a refinance in Washington, Oregon, California, Idaho, or Arizona, make sure to reach out. Again, I'll have a link in the description of this video to connect, and we'll see you in the next one.